Hello students, welcome back to my channel. Today we will discuss about 12 marks problem, that is about admission of a partner. Okay, let us discuss one problem. A and B are partners sharing profit and loss in the ratio of 2:1. Balance sheet as on 31st March 2018. They had given liabilities amount, asset amount. So assets are cash in hand 5,000, stock 15,000, debtors 20,000, machinery 30,000, building 60,000, investment 12,000. And about liabilities, creditors 20,000, bills payable 10,000, reserve fund 12,000, capital A 60,000, B 40,000. Together it is 1 lakh. So on 1/4/2018, C admitted into partnership on the following conditions. So adjustments are: C should bring 25,000 as capital and rupees 15,000 goodwill for his 1/by share of future profit as per AS 26. Appreciate building 20% stock is revalued at appreciate building 20,000, stock is revalued rupees 12,000. Provision for doubtful debts at 5% on debtors. Outstanding salary rupees 2,000. So in this we have to prepare revaluation account, partners capital account, cash or bank account and the balance sheet. So first we need to prepare revaluation account. Particulars amount. Okay. If assets are increased, liabilities are decreased, the items will come under credit side. If assets are decreased, liabilities are increased, the items will come under debit side column. Okay. First we need to see the adjustments here. C should bring cash 25,000 as capital, 15,000 goodwill. It will come under partners capital account. The next adjustment is appreciate building 20%. So appreciation, that is value of building is increased for 20%. So it will come under credit side of a revaluation account by building. So 60,000 into 20%, that is 12,000. Then stock is revalued rupees 12,000. So what is the value of stock here? Value of stock 15,000. So it is reduced to 12,000. So it will come under debit side to stock. 15,000 minus 12,000, we will get 3,000. Okay. Next adjustment, provision for doubtful debts at 5% on debtors. So 2 PDD 20,000 into 5%, because value of debtors is 20,000. So PDD is based on 5% on debtors. So 2 PDD 20,000 into 5%, 1,000. The next adjustment is outstanding salary rupees 2,000. It will come under debit side to outstanding salary 2,000. Only these items will come under the revaluation account in this problem. Okay. After this we need to make the total. So right side is more 12,000. So same total should write on debit side 12,000. From the 12,000 have to deduct 3,000, 1,000, 2,000. The remaining amount is 6,000. The 6,000 is have to transfer to partners capital account. So we need to share this 6,000 to two partners, old partners A and B. 6,000 into 2/3. 2/3 is their share. You can see here share is ratio is 2:1. So 6,000 into 2:1 means 2 plus 1 is 3. 6,000 into 2 divided by 3, 4,000. 6,000 into 1 divided by 3, 2,000. After revaluation account has been completed, now we will move to partners capital account. In the balance sheet we can see the capital A 60,000, B 40,000. So first we need to write in the partners capital account by balance brought down 60,000 and 40,000. After this, next item is reserve fund. Reserve fund is 12,000. So we need to share in their ratio, old partners ratio, 12,000 into 2 is to 1. It is 12,000 into 2 by 3, 12,000 into 1 by 3, 8,000 and 4,000. After these items, we need to see the revaluation account. The amount which is transferred to partners capital account from A and B, that is 4,000 and 2,000. So we need to write by revaluation account. The entry is revaluation account debtor to partners capital account. So it is the partners capital account. We need to write opposite entry, that is by revaluation account 4,000, 2,000. After these items, the adjustment we can see, C should bring cash rupees 25,000 as a capital and 15,000 goodwill for his 1 by share of future profit as per AS 26. So for this adjustment you need to know the journal entries first. If goodwill brought in cash, the entry is cash or bank account debtor to new partner capital account. Who is new partner here? That is, it will come like to C's capital account. Okay, for distributing goodwill in sacrifice, so new partner capital account debtor to old partner capital account, that is C's capital account debtor to A's capital account to B's capital account. If the amount is withdrawn by the old partner capital account debtor to cash or bank account. So C has brought cash as well as goodwill. Cash is 25,000 and as a capital and 15,000 as goodwill. So 25,000 plus 15,000 is 40,000. As per journal entry, we need to write opposite entry like cash account debtor to new partner capital account. We will write by cash account. By cash account 25,000 plus 15,000, 40,000. For distributing goodwill, the entry is new partners capital account debtors to old partners capital account, that is C's capital account debtor to A capital to B capital. So we can write here, we have to distribute the goodwill 15,000. We need to distribute like by C's capital account, that is 15,000 into 2 is to 1, 15,000 into 2 by 3, 15,000 into 1 by 3, for A 10,000, B 5,000. To old partners capital account, that is to A's capital account to B's capital account, the amount will come under C's column, 10,000 and 5,000. So all the entry have been entered. Now we need to make the total. On the right side, total will be 82,000, 51,000 and 40,000. The same total we should write to the debit side column, 82,000, 51,000 and 40,000. So the remaining amount is to balance carried down. A's column nothing will be there, 82,000. B's column also 51,000. 40 from C's column, from 40,000 we need to deduct 10,000 and 5,000. The remaining is 25,000. So it will come under balance sheet. Next we need to prepare the cash account. So how to decide whether we have to prepare cash account or bank account? We can just see in the question balance sheet. If they had given cash, we need to make cash account. If they had given bank, we need to prepare bank account. In the cash account, first we need to write the amount which is in the balance sheet, cash in hand 5000, we need to write like to balance brought down 5000. The next amount, partners capital account, we can see that if C brought cash, the entry will be cash account debtor to new partners capital account, that is to C's capital account. So we are preparing cash account, we need to write the opposite entry to C's capital account, that is 40,000 to C's capital account 40,000. After this, no more cash items here. Let us close the cash account. 45,000 total. In the credit side, we need to write by balance carried down 45,000. Finally, we need to prepare the balance sheet. Columns will be liabilities amount, asset amount. The first item, here we have cash in hand 5000, no need to write that one. The cash account just now we have prepared, that's we got 45,000 cash 45,000. Then next item is stock 15,000, and stock have depreciation 3,000. So 15,000 minus 3,000, 12,000. Next we have debtors 20,000, and we have the adjustment provision for doubtful debts 5% on debtors, that is 1,000. So debtors 20,000 minus PDD 1,000, 19,000. Then machinery 30,000, same we have to write 30,000. Then the investment 12,000. Building 60,000, building has appreciation, that is 12,000. Building 60,000 plus 12,000, total outside 72,000. And in the liability side, creditors is 20,000, bills payable 10,000. We have to write creditors 20,000, bills payable 10,000. In the adjustment, we need to see outstanding salary, that is liability 2,000. Outstanding salary 2,000. Then the capital we need to write, that is we got from partners capital account. Here we have in the partners capital account to balance carried down, that is 82,000, 51,000, 25,000. We need to write it in balance sheet. Capital A 82,000, B 51,000, C 25,000. In the outside the column 1,58,000. After these items, we need to make the total. If you got the answer, both sides same, your answer is correct. So the total is 1,90,000 in the liability side and 1,90,000 in the asset side. So hope you understood this problem. Thank you.